Hey, episode 6 coming your way, Agent Boost Podcast. Dan Hardle, Mike Hardle, and today we have our guest, Cori Moyes. So we're going to be talking...
Classing up the joint here, Cori.
Absolutely. We're going to be talking health sales. We refer to it as ACA, IFP, individual family plans, some small group. So going to be talking all that. So Cori, go ahead and introduce yourself.
Some of you know me, some of you don't. My name is Cori Moyes. I'm your VP of ACA and Marketplace Plans. Gotta scoot up so you can hear me. Can you hear me now? Perfect.
Cori's only used to speaking to live audiences in stage in front of hundreds or thousands of people.
Hundreds of people or just singular camera. So here we go. I'm excited to be here. I'm excited to be a part of the Agent Boost family. As you know, this is a new division that we're building. We're super excited. Open enrollment's right around the corner. Why would you want to consider an upline agency for ACA? I think you need a lot of support. There's a lot of changes happening in the industry. There's a lot of compliance changes that are happening. We are working on a lot of interesting and unique ways to automate consumer consent forms and really helping our brokers be compliant as they're moving into the selling season, helping them understand distribution and sales and upselling and cross-selling and really growing their books of business. So I'm excited to be here. Yep. Thanks for having me.
Yep. So when we started this division last year, we sought people out that, we wanted to be subject matter experts, people who were great at what they do. And, we found Cori working with one of our carrier partners, and we felt like because of her background and experience and, just knowledge that she could help our broker and grow that division, she was a great fit.
So Dan, you mentioned that we just kind of dove in last year more into ACA. Can you maybe, for some context, talk about why we kind of avoided it like the plague necessarily?
Yes.
For the first few years, and why we kind of have changed our tune, so to say.
Yeah, it's a great starting point. So for years, we didn't consider it to be an investable division or line of business. And it was simply because when you look at the Affordable Care Act, post-ACA, the way it was set up and the way that reserve pools are all set up too, there was a lot of these co-ops that were set up, and, they were all throughout the country, these smaller entities, and it was supposed to provide more choices for consumers. But candidly, they just didn't have the ability to, compete very well. And Cori can stop me anywhere along this way, but they were failing everywhere. And so there was a lot of uncertainty and instability for the first couple of years after the Affordable Care Act was passed. And so because of that, brokers were selling carriers. Carriers didn't have the ability to pay commissions. I lived through this period of time where even in like Nevada, for example, which is a private exchange, they pulled hundreds of brokers into the room and said, hey, you're going to get one more month of renewal commissions, and then after that, you're not getting any commissions. We're just not paying them. You're done. And there was just so much uncertainty about the stability of the products, the premiums, and then in the health market, people come on and off. You're not going to have that longer period of consumer on a plan.
Like Medicare, yeah.
Yeah, like you would Medicare, that persistency. And so it just was not the right timing. And so
having to do all the re-enrollment every year.
Right.
Yeah.
And so because we lived through all that, we kind of were waiting for a lot of the turmoil to kind of work its way through the system. And now we're finding that the reserve pools are in a much more stable position now. You're seeing carriers that actually want the business, that they're saying, yes, we found a way to be profitable. We actually want to get more membership. Please go sell it for us. Commissions are a lot more stable. And so that's why we think that now is the time for us to really put our foot on the gas, go grow that division. It's still a very open marketplace where there's just so much out there, and their potential. You're building your future Medicare pipeline anyway. Your average, the other reason is for agents who are selling like Medicare or life, for example, your average transaction you do is like 1.2 heads. Like if you sell life insurance, you might get a husband, wife, or family members. Same with Medicare, you might get a husband, wife. So your head count, like per transaction, is like 1.2. With, selling health insurance, even if the commissions are different, your average is going to be more like in that 2 to 3 heads per transaction that you're selling, and it all depends on the state. But so anyways, those are some of the reasons why now it's a very good and investable market. And we'll talk more about the the political nature and kind of the sentiment at the moment.
Yeah.
And the desire to grow that kind of as we kind of go throughout the podcast.
Yeah. The other thing I've seen is a lot of the carriers too, when the Affordable Care Act first passed with the co-ops, there was a lot of these fly-by-night carriers, and we saw a lot of failure and things like that. Now it seems like with stable regulation and depending on the political winds, everything has kind of changed, and it's just become much more manageable and profitable for these insurance carriers. And then, like Dan mentioned too, the political winds, there definitely is an appetite to continue to add heads onto these managed care policies, whether it be through ACA or through these Medicare Advantage plans. So, Cori, why don't you take us back to how does one get into being a position of your place? How did you get into health insurance, and specifically on the Affordable Care Act side of things?
Ooh, that is a long story. So I actually
Make
started
it short.
in the PNC. Yeah, started in the PNC world right out of college. Got into life and disability kind of in my late 20s, started managing a book of business up in Ketchum, Idaho. Select Health was expanding into the state of Idaho at the time. And one of my board members from St. Luke's came in and said, hey, we want Select Health. So that's what kind of started that journey for me on the carrier side of things. They recruited me to come and run their expansion. I ran that expansion market for 7.5 years and then came down to Utah to run Medicare.
So what advantage? So you learned the health insurance on that side of things in the booming metropolis of Ketchum, Idaho.
Oh yeah.
I actually think it's an advantage to work. Idaho's a little bit different. Explain how some of these different state exchanges operate a little bit different. And I kind of think it's an advantage to learn these ones that are more difficult to work with, because a lot of the big FFM ones seem to be much, much easier, much more seamless.
Oh, absolutely. Initially, Idaho was an FFM state, so I wrote the first year on FFM. It's a little bit of a hot mess. It's much more dialed in now. Idaho was actually one of the first state-based exchanges to come into play. So there was a lot of heartburn there. There was a lot of integration issues there. They seem to have worked out those kinks. So they're doing really well. What I do like about state-based exchanges is that it's very state-specific targeted training. And there's a lot more integration and actually fact-checking. So right now you see in the FFM space, there's not a lot of SEP regulation, so to speak. Your state-based exchanges are actually the ones who are going in and vetting and validating the SEPs.
So more control, more checks and balances, so to say.
Absolutely.
So from a macro view, let's talk about that. You have a handful of state-based exchanges throughout the country. And in the mountain states over here in the West, we have a lot of these private exchanges, right? And so if you're an agent, if you're already in the space or you're thinking about getting into the space, to give you a little bit more context, every year you have this FFM, this federally facilitated marketplace certification to do. And once you do that certification, you're good to sell product in all of the state, the federally facilitated marketplaces throughout the country. And that's 30-something states, if I'm right, Cori. Yep. And then again, there's states who actually build their own private exchanges. So, and I'm not going to name off all of them, but for example, you have California, Washington, Idaho, Colorado, Nevada. A lot of these Western states are all on their own private, exchange, as well as like New Jersey and Kentucky and several others. So anyways, we see a trend, and we actually had this conversation with carriers the other day. We think there's so much money on the table that we're going to continue to see more states, unfortunately, going to private exchanges. They want to do that. Obviously, for us as brokerage and distribution, it's easier for us to just do one certification and then be able to sell in the entire nation, kind of like AHIP with Medicare. But unfortunately, when you have a private exchange, you're going to have a separate certification for every one of those private exchanges. So just keep that in mind if you're listening, you're thinking about jumping into the space. If you're going to be in multiple states, there's a potential that you might have to learn multiple systems, multiple different certifications, depending on your footprint.
What do you think the advantage of that is for these states? Do you think it's a financial advantage, or is it more regulatory control? They're able to kind of have more of a quality experience. It's money.
It's both.
I mean, I think people in government like to hang their hat on the idea of feel-good initiatives and, hey, we're going to do this to create quality or better measures or have a handle on it. But I think at the end of the day, like we say, money runs the world. And I think that affects behaviors and even within the states. And I think a lot of that you're going to have to look at, is it a blue or red leadership in power and what is the prerogative of that? And that's state by state, right?
So let's talk about the, kind of the political climate. And, it does definitely seem like we talked about, and we heard this even from an anonymous carrier, that there is a for sure an appetite to grow the roles, grow the people that are on these managed care plans via ACA or Medicare. And Dan, why don't you, we've talked about it a little bit on one of the earlier podcasts, but why don't you kind of give some insight on what you think is happening there?
Yeah, I think that right now when we talked about the big picture of, and I used in a prior podcast, like, legalization of marijuana as like an example only, and how when government, and I don't care if it's left, right, red, blue, whatever, there's kind of this prerogative from both sides right now. Government wants to grow always, and they want to get, there's been topics of socialized medicine, Medicare for all, these other programs for healthcare, and you look at all these other nations. And if you take this public opinion right now, most people would vote against Medicare for all or socialized medicine. However, I think over a 10 or 20 year period, when you're starting to, you have Medicare Advantage plans already in the Medicare space, which, the government is providing funding to private entities to facilitate those plans. And if you start looking at healthcare and health insurance plans, and same thing, the government is providing funds to subsidize health plans, it kind of is going to meet in the middle, so to speak, and eventually get to where the majority of Americans are going to be on some form of government subsidized program. And I think that's the direction, good, bad, or otherwise. I'm not saying that I have an opinion about whether we should do that or not. Nothing like that. It's just where it's going. That's just the reality of it. And so I think that that's where things are going to end up in the next decade, so to speak.
Yeah,
absolutely. Well, and I was going to say there's essentially that three-pronged approach, right? So you've got your Medicaid, you have your health plans, and then you have Medicare. So it's a three-pronged approach. What's interesting is a lot of the states that play in the exchange space, they didn't expand Medicaid. So you have this entire subset of population that don't qualify for Medicaid or subsidy on the health plans. So you've started to see over the years, the states come in and say, okay, we are going to expand Medicaid. We're going to increase that FPL. We want to get people enrolled in these government-sponsored plans in one way or another. Yep. So you're seeing a lot of change.
And then you have the people that slip between the cracks too, right? That don't qualify for subsidies. And then a lot of times they're on STM plans. Biden currently, the administration called them junk plans, right? Junk medical plans, right? Which are not the case. It's just, in order for things to function like they want, you need higher income earners who don't get subsidies participating into the marketplace to kind of help subsidize or offset, all the people who are getting subsidies. And, like it or not, those people don't enjoy paying extremely high premiums. And,
what's funny is your STM plans really model and mirror the pre-ACA health plans.
Yeah.
No pre-existing conditions, no preventive care, right? Medical underwriting, all of the things.
Since
your STMs actually really follow that pre-ACA model of health coverage or an indemnity product.
And since we're talking about it right now, from everything STM plans, and as it sits right now, agents can still sell them through until the end of the year, correct?
Correct.
And then if they're on it, they carry through for 2 more years before they drop. So even though and I think we're kind of waiting for the final ruling still as to whether or not that's going to stand. But I do have this opinion that when they've already made up their mind, kind of like when I say CMS sends out this call letter in March for Medicare, and here's the things that are on the table for discussion. It might modify by 5% or 10%, and it's almost like they solicit feedback as kind of like a I don't know. Part of
the due process, but it's already been done. Yeah.
Let's pretend like we solicited input, but they already have their minds made up. And so I think that's how it is with STM. Their mind was made up. They were going to get rid of them. They are still taking that feedback, and we haven't gotten the final rule, but it looks like brokers can sell it to the end of the year. And again, 2 more years until those plans would sunset.
So if you were a broker, would you still be focusing on selling some STM policies, or would you
if it's the right
be looking
thing,
I absolutely would.
Yeah.
And the reason why is because it is the right fit for some people. Mm-hmm. Right now, there are products in the marketplace where you can essentially buy a 1-year policy with a built-in renewal. So that policy remains in effect for 24 months with a set premium per 12 months.
Yeah, and people shop annually anyway, right? So if you're getting an STM now and you're going to have it for this year and you're going to have it for 2024 and you're going to have it for 2025, having even certainty on your healthcare coverage for even 2 years is pretty reasonable. Most people who work at an employer and you have commercial or employer-sponsored coverage, you don't even have certainty on networker benefits for 2 years out. So I think that feels comfortable.
Well, and our STM partners, I mean, they've already said and expressed as much that they'll just evolve and adapt and have a legal or viable product going forward that will still kind of meet those needs, is what it sounds like anyway.
Yeah, and there's always going to be a need, like we talked about, for creative insurance products or indemnity products.
So let's shift gears a little bit. We've seen, at least I've seen in the past 2 years, a major shift in attitude of agents, particular agents that were selling, senior market products like Medicare and life insurance and things like that, and a big jump or a kind of a gold rush into ACA over the past 2 years. In addition to obviously this appetite from the government to fill those roles, why else do you think agents are doing that?
I have opinions.
Do you want me to address that, or do you want to
Corey, you go first, and then I'll go.
My personal opinion, I think back in the good old days of insurance, right, there was this reciprocity. I'm going to cede my ACA lead to you or my under 65 lead to you in hopes that it's going to come back to me and vice versa. That's not happening anymore. You're seeing more and more agents sell across lines. So if I'm referring my non-ACA or my non-Medicare client to you in hopes that it comes back to me and you're retaining that business, I'm losing business. So now what used to be this reciprocal relationship, you're starting to see that kind of dwindle. And you're starting to see places like PNC shops and other agencies starting to expand what they're offering. So I think there's less opportunity to actually create those reciprocal relationships.
Yeah, for a lot of state, at least one state sellers and what you're talking about, there seems to be less barrier of entry than in Medicare. And so there's been a lot of other agents that are kind of rushing into that. But there's a couple other reasons why I think too, Dan. What do you?
I want to say, so if you're an agent who's been selling multiple lines, like I should never say never, but I loathe PNC. It's just not a line that we're interested in. But, but we do obviously the Medicare, we do health, we do ancillary products, we do life, annuity. But when you look at these other products, if you're an agent who makes your primary income off of life insurance or annuity sales, that's a challenging business. It's hard. And I'm not saying that you can't be successful, but it is more challenging. Where we see a lot of agents succeeding is they have another core product, whether it be health or Medicare or other things, and they'll occasionally sell life cases to that book of business. Same with if you're a Medicare agent, and we've had all these headwinds of regulation and other big entities coming into the space, the compliance has gotten very, onerous, so to speak. It's very rigorous, and you don't have those same challenges right now in health. And so I think it's easier for agents to adapt, and it's a much easier understanding of the products. And there's not as many headwinds, not only for compliance and certifications, ready to sell status, what you can or cannot do as far as marketing. And so because of that, I think that's also why so many brokers are getting into that space.
Yeah,
I would agree with that too.
I had a frog in my throat. I think that's...
Well, and it's complementary too, right?
Yes.
So
Absolutely.
if you have these brokers that are selling life or Medicare, other things, they've been turning away business for years. Someone goes and writes this T65 and it's a couple, and how often is it that they're both 65 years old at the same time? Almost never. And they've just passed on that business and that revenue for so long that this just becomes another, arrow in the quiver, so to speak, right?
Yeah, I think the compliance is a major factor in there too. The passing up, it did get easier. It's a more viable. The longevity or the retention on those policies is obviously much easier as well. But I think the lead generation and cost of leads for agents, that's kind of what I saw on the agent side, especially a lot of our agents in the field, was over the past 2 or 3 years, especially during COVID, as everything started getting much more loud and much more noisy and much more expensive to gen leads and buy leads and send mailers and things like that. It almost had it was way easier, cheaper, less regulation, less compliance to gen leads or kind of market as healthcare generic first to these people, and then kind of use that as like a loss leader almost to get into Medicare too. And by doing that, agents started building a little bit of a decent book of, having heads on the book, and started getting a decent amount of the renewals. And like, this is actually a viable product now.
Well, and as more competition has come in to the different states, regardless of where you are, the commission rates have gone up, bonus pools have gone up. Your ability to make more money in the ACA space has increased over the years with the natural trajectory of more competition coming into the market.
Admin overrides for a little bit more support and structure, co-op dollars. It's really slowly but surely shifting into a more familiar model.
It's evolving, right? Like we saw with Medicare. So when Medicare really started taking off back in 2006, 2007, 2008, and it's just had this upward trajectory. Same thing. We didn't see all the regulations. It was, supply demand. There was this demand for the products, and there wasn't that big of a workforce or labor force that actually was there to facilitate, right? And I think that's kind of how it is right now with health, with a lot of these carriers, and we're seeing them put more infrastructure in as far as employees, managers, regionals, directors. There's that staffing there. We're seeing the technology catch up a little bit. You look at like industries like life or doing drop tickets, and you look at Medicare with all these sophisticated enrollment tools and quoting platforms. We're seeing ACA starting to catch up and come along. And so I think when you look at carrier portals too, it's somewhat stripped down, or there's not as many features or functionality. And now we're seeing heavy investments into everything from, again, labor, infrastructure, technology, support for agents, and getting a more sophisticated distribution model that we're starting to see now in these health products.
Absolutely. Well, and it is a really unique time. I just want to hit on we talked about Medicaid expansion, COVID stabilization kind of within the industry itself. What we've seen, I would say about 3 years ago, pre-COVID, you saw a lot of stabilization happen within the ACA space. Kind of your onesie, twosie players, they exited the market. Your big dogs stayed put and started to reevaluate plans. The plans became more profitable. People started to understand how this was working. Then COVID hits, right? And we go into this Medicaid freeze. So for those of you that don't know, essentially if you were qualified for Medicaid at any point in time, you got locked down. And there was no redetermination that happened for almost 3 years. It's such a unique opportunity right now with Medicaid unwinding, essentially in place until the end of July 2024. This is the largest movement in the ACA space since the enactment of Obamacare and the Affordable Care Act. So
that's a major driver for sure as well. I do think that the consumer side has changed too. I mean, maybe you can talk a little bit about how, even those who have access to insurance through an employer plan or whatever, how those regulations and rules have kind of changed. But I also think that, early on in the Obamacare days, it was almost kind of stigmatized if you were on, it was like you were on discount or like subsidized insurance. And at least from my perspective, it almost kind of seemed like you were embarrassed to say you were on one of those plans. And they've really matured, and they're great plans by reputable carriers, and it's real functioning good insurance.
Well, and what's the threshold? I can't even remember. It depends on heads and households, but what's that maximum threshold that you have where you're still getting subsidies? I can't remember.
It depends on the household size, 400% FPL, and actually there's even wiggle room there. So if you're a family of four and you're making $100,000 a year, you're still qualifying for subsidies. So you're still getting tax credits or cost share reductions. And so I think you're right. There was kind of a stigma around, especially for your middle class people. Like your high income earners were like, we don't play in that space. Then you got your Medicaid population, they're just lower income earners, It just is what it is. And the middle class, we're like,
but you talk about,
what do we do with this?
Yeah, most people in the middle class, though, that's it. They have 1, 2, 3, 4 kids.
Absolutely.
And they're making $100,000 a year.
Or less.
They're getting subsidies. Right?
Absolutely.
Most people are.
So people who couldn't afford to access care before, they literally could not afford it. This was a pathway to get them covered.
Yeah, what I was saying with some employer plans is for, depending on your situation and your finances, it might make more sense or viable to opt not to get it through your employer and just get it through the exchange these days.
That's the glitch.
Let's talk about it.
Go ahead,
so
Cori.
Initially when ACA came into law, there was a ruling and an affordability test in small employer plans that essentially said if the employee cost for coverage So if I'm an employer and I'm only paying half of your coverage, if your cost as the employee exceeded 9.12% of your modified adjusted gross income, it's deemed unaffordable. So now I, as the employee, can waive off the group plan. The group's still meeting its participation. I can go out on the exchange now and qualify for tax credits. Here's where the loophole was. It did not extend to the family. So let's say, same scenario, I'm an employer, I'm covering 100% of your coverage. The ruling stated that if I'm eligible for employee coverage as a spouse and a dependent or a dependent, I don't qualify for tax credits on the exchange regardless of the cost. So there was an amendment made to that definition of that rule in 2023 that essentially states that if the cost for dependent care exceeds 9.12% of the household magi, now I, as the dependent and child, can go out on exchange and qualify for tax credits. So it was a major correction to the law in this last year. But a lot of employers aren't aware of it. And quite frankly, we've been teaching it to brokers since I got here, letting them know this is how you have that conversation and coach and educate your people.
Well, and ultimately we want to put those people in a better position, right? Because sometimes, especially working for small employers, the benefits aren't that rich. And when they're able to go out on the marketplace and find a more benefit-rich plan or cost them less, it's a win for them. And it kind of speaks to what we're saying. There's an appetite right now from the government to put more people on those plans.
Absolutely.
So let me ask you this. If I'm an agent, Dan, why would we or any FMO that's been doing Medicare traditionally, why would we want to work with us? Why would you want to align your ACA business with us?
A lot of reasons. So number one, technology, right? Within even most people are using Health Sherpa, which we haven't really talked about. And, you know, one of these days we're going to bug Scott or Jordan or someone to come on with us. But there's a lot of functionality and features within Health Sherpa, and when an agent aligns with our firm, their commissions don't change, so they'll still make what they're making, but we have some admin accessibility within Health Sherpa to help them with their renewals and managing their book of business and pulling reports and helping them. So that's one thing is technology, but then also just training, you know, and understanding not just, you know, health overall. So you have your marketplace, which is on the exchange, which is subsidized. You have your off exchange or direct with carriers. You have your short-term medical. You have group. So you have these different scenarios, and obviously we have very knowledgeable people that can help with that and navigate you through not only training and understanding what's the right fit for your client, but even running quotes. And then, so that's everything from lead generation and finding sources and ways to grow your business. So we help agents to say, hey, we have approved vendors. These are great. Here's our cost. Use these vendors for your leads, getting the training that you need to be an actual good broker, using the technology. And then, of course, we're always going to tell you, here's your best practices. We haven't talked about renewals and renewing it yet, which is a very different aspect from other products that we do. But that's a big burden for people to do every fall, there to re-enroll or renew all their members. And I think we have good strategies to help brokers with that too.
Yeah, so my perspective is if you can build a big agency and a big entity and do a lot of these numbers, Medicare's hard, right? Medicare is complicated. It's much more complicated as a product. The compliance, the lead gen, everything is more expensive, more complicated, more expectations. And so as we've really dove into ACA, over the past 2 years, it's been pretty easy, honestly, and we've been able to see rapid growth and do some pretty impressive numbers very quickly. And so I think that it's like when you get used to doing business in a much more difficult space, and you're kind of doing it the hard way when you have a product and an ecosystem and an environment that's much easier. You're almost really set up to do well and win really quick, which is what I feel like we've been doing the past year and a half, 2 years.
I think there's been a month in which we'll write in a month what carriers thought you would write in a year or 2 years, you know, with some of these carriers.
Absolutely. Well, and I think that, I mean, every broker knows this. As you start to grow, there's a critical mass point as an individual broker or even in an agency where you need strategy that helps you retain your business, service and sell to your business. You need to be able to retain that client because we know it's much easier to retain a client than it is to actually go get new business. A lot of brokers have a lot of confusion around where do I focus my time, energy, and effort? How do I retain what I'm getting or what I'm doing now? How do I go out and sell new business? how do I implement tools and technology? They don't know where to turn. And I think that's one of the biggest values of working with an upline agency like us.
Yeah.
Yep. And
We have done for you, it's strategy. We've tried, true, and tested things, continuing to grow and expand what we are offering. And I think being able to offer that to a broker, it takes the confusion out for them.
Yeah.
They can take what we're doing and kind of tweak it to their liking.
Yep.
I added one, you just, spurred like this thought that I had too from our conference we did a week ago too. And I was telling brokers that you need to find ways to extend the value of each customer, right? And so you can do that in one of two ways. And one of the trends, like we haven't started talking yet about all the e-telebrokers or anything else in the industries, which we should at some point. But if you notice a trend, all their LTVs are down. They're decreasing. They keep getting smaller. It used to be that on, like, for example, Medicare, you would have a client on the books on average 4, 5, 6 years, and that number of years that they're on renewal is decreasing. And so with brokers, I've been trying to say you need to make that customer or that client of yours more valuable. So you do it in one of two ways. You either sell them more products to get more value out of that customer, or you have them longer. And so selling health or ACA products, you can take one customer and instead of having it be a client for 3 or 4 or 5 or 6 years, they could be a client for 20 years. Yeah, and absolutely. It extends that revenue you're getting from that client. So.
Yep. Yeah, absolutely. I think that, there's a couple other reasons why you as an agent, I think, should sell ACA. And right now, my analogy is it's kind of hungry hippos, where, there's just all the marbles floating around and all the hippos are trying to get as many as they can right now, because it's kind of that get it while it's good. I think that even with AORs, we see a lot of AORs happening right now, agent of record changes, and it's a little bit wild west and kind of unregulated. And we see a lot of agents and agencies fighting over AORs. That's going to all change, right? Like, opportunities are going to change very quickly.
It's starting to.
It's already starting to change. We're already starting to see course corrections from different carriers, and regulations going to come in. But I think that there's a time frame where this is going to be a good opportunity for agents, and then it's going to be a little bit more difficult, and it's going to be some settling.
Yeah, Cori, can you talk about that? Like last year, the consent that they implemented last year, and then this year, some of the new changes with AOR stuff.
Sure. So we've never seen any kind of compliance regulation at all in the ACA space, other than that you have to be certified to sell. That's really been it. And it is the wild west. So for those of you that have sold in the space, you've probably heard rumors or experienced this yourself. People can just go in and pull in a marketplace plan and assign themselves as the broker. And there is no recourse. There's nothing you can do except to go take that client back. Mm-hmm. So what was implemented in June is this consumer consent form. So now you as a broker have to present this to your client, existing clients and new clients, that says, hey, you're authorizing me to be a representation for you, to be your broker of record. Here's the information of yours that I'm accessing. So it's your marketplace plan information, all of your PII, your PHI, all of your tax documentation, all of your financial records, everything that's in that account, you're now authorizing me to access. And that stays in place now until the consumer rescinds it.
Which I'm just going to jump in here and say it's kind of wild.
Yeah.
If you think about it, that for years that a broker could just kind of get consumer lead information, which they would do, generating leads, and go, yeah, that's my client, and then just go into a portal and say, it's mine, I'm taking it. And they would do this in mass. And we're talking, we know entities.
No contact, no lead.
They never even spoke
no
to the customer
at all.
And they were just saying it's mine, and carriers were paying them like the broker of record until last year. So in my mind, I look back and think about all the regulations with, if you were in the financial space, SEC and FINRA and DOIs and
Absolutely.
CMS and all these entities, and you kind of go, how did this skate by for years with no regulation? And so it still blows my mind thinking about that. But that was the first step, right? Finally.
That's the first step.
And then this year, they kind of started cranking it down a little bit more, right?
What you just saw, for those of you that write with Health Sherpa, or maybe you're not writing with Health Sherpa right now, but one of the things that they've implemented, and in fact, they just sent the notice out today, they're going to start showing you. So when you go in, client comes in to sit with you, you'll pull their marketplace information in, you can see who the assigned broker of record is. And they're actually going to shoot out an email and notify the existing broker of record when there's a change now. And we've seen some of our large carriers in our regional space come in and say, we won't accept a marketplace plan change or agent change. You have to do it within our broker portal. And that way they're protecting that consumer's relationship with their broker, you're going to see a lot more of that happen. You're going to see a lot more regulation happen. That's one of the beautiful things about your state-based exchanges. You don't see that client stealing happening because the client actually has to consent to it. They choose the broker. If somebody wants to do a broker change, the broker actually has to go in and accept the client as well.
Okay.
So there's a lot more regulation in the state-based exchanges for that. Where we've seen the wild, wild west is the FFM.
Yeah, I think that's good. I mean, ultimately, that benefits agents who are doing things the right way, entities that are doing things the right way, and, kind of weeds out some of the bad actors, people who are trying to essentially squat on all these lives and make the revenue for not doing anything.
Well, one last thing, too, that we didn't even talk about there is principal selling NPN. So meaning that there's agencies and entities out there, too, that up to now, and they're still doing it, where the agent who's selling didn't need to be licensed, appointed, certified, all the things that you're used to seeing normally. You'd have one principal of the entity that is certified or good to go, so to speak, and you could line up 10, 20, 30, hundreds of people below them selling products, just kind of muling it, so to speak, using their NPN or certifications and extending that to tens or hundreds of people, which has also been wild. We kind of made the strategic decision back when we really started this and doing direct to consumer and call center and everything else. We just said, look, we're going to do it the right way right from day one, where we license the agents. It's on their NPN. We certify them all. It's individually. Yes, there's more expenses. We have to pay for licenses and fees, but in our opinion, it's like we want to put that responsibility and accountability on the rep doing it. And that's how it should be done, in my opinion. And again, we still find a lot of other entities who are not doing it that way. And they're like, you know what, we're going to keep riding this out until the wheels fall off.
Yeah. Ultimately, we're insurance agents. We are, as the brokerage, are compensated for administrating services, performing our services. Agents are getting those renewal commissions for being an agent and actually offering value. It's not just like my hungry hippo analogy where we're just, you kind of squat on things and hope to never have to deal with that life ever again and make money for essentially doing nothing. We have a fiduciary duty as agents that we're always, reminding the agents, hey, you're helping people with their health and their wealth, and you should be a licensed professional, and that should be your driver right there. And then you should be, compensated for doing that. One last thing I wanted to say, I don't where we're at on time, but one thing that I think you should consider when you're doing ACA is there are such things as agency and admin overrides, right? Depending on your production and your volume. And we do see a lot of people doing significant volume out there, but they don't have any sort of agency or any potential upline or override structures available to them because of how complicated some of these situations are. So you want to make sure that you're with somebody like us or another entity that's going to be able to offer, sufficient admin overrides or GA or agency structures, not just in your local state, but nationwide.
Well, and the whole idea comes in too, right? Where if you're an agent and you service a book of 300 enrollments that you do in a total of 400 heads, that's fine. You're an individual agent and you can manage that book of business very reasonably. And the whole idea that Mike was speaking to is once that block of business gets large and you're talking tens of thousands or hundreds of thousands of members, the extra money comes in administratively to help really retain and invest into initiatives to still provide that same kind of quality or experience that person is getting, just like they would a local agent in their backyard managing that book of 200 or 300 people. And that's why that money exists and why it's there.
Yeah, and the only reason why I brought that up is because a lot of agents that I talk to don't even have an idea that those type of things are even a potential like they are on. Everybody knows those are available on the Medicare side of things, on the supplements and the Medicare Advantage side of things. But I come across agents all the time or agencies that have giant blocks of business and they didn't even know that those potential for additional compensation are available.
The best is when they're actually lined under somebody and they've never even heard of that. They've just written, 10, 20, 30,000 heads or more. And they didn't even know that somebody had made,
gobs of money,
grip loads of money off of them.
Yeah. How do we get some of that?
And we still find that, right? We've done another podcast episode about it too. And they're like, "Oh, I'm direct with that, Cori." And you're like, "Sure, you're direct, sure." and they have no idea that they're actually. You remember that email that you got in your inbox 4 years ago that you clicked on to contract and you thought it was with the carrier? Yeah, it was with another.
Some of my favorite but also sad conversations are with agents once they get red pilled and they find out like that they actually were layered under a bunch of other entities or sub entities, and how much, when they start realizing how much money they've actually made these people that have never offered them any value or services. It's amusing, but also very sad.
It is. It is.
It is sad.
What else you got, Cori? Anything you want to do to? Anything else we should be talking about?
Why should agents sell ACA?
ACA, the health market in general. What did we not cover in the podcast that we should?
Well, I think we touched on a lot of it. I got to scoot forward. Excuse me. I think this is a really unique time, like we already mentioned, that there's a lot more movement in the ACA space with Medicaid unwinding. There's a lot more legislation in place that allows people to go out and get coverage on the exchange. If you are not selling ACA, you're missing out on a massive, massive block of business. Build a pipeline straight into your Medicare. And in this day and age, you know what? We're all in this business to help people, but we're all in business to make money. Money fuels our lives. It fuels the experiences that we want to have. And so we have these beautiful ways, I think, that we've created here at Agent Boost to support brokers, to train them, to educate them, teach them how to cross-sell and upsell. So you're not left out in the wild, wild west by yourself trying to figure it all out. So coming in, getting the right education, the right onboarding, really learning how to sell and grow professionally and personally, that feels good. So it's not just we're getting in the business to make money, but we're getting into the business to fuel something in our life, to take care of people that we love and care about. And we want to do a good job.
Yeah.
And so I think Agent Boost marketing, I know it's one of the reasons I ended up here, right? And I say this all the time. I bought into the vision. I could see what we were doing was different than what other uplines are offering. So it's been really fun to create and support brokers to build strategy and create training and tools and technology and really help them grow. It's exciting. So I'm like, get in the game.
That's a good sales pitch. You're a good spokesperson.
Right?
We should hire you.
Get in the game. Yeah. You should hire me already.
I think you nailed it right there. I do believe personally that who you're if you want to do ACA, you want to do life, you want to do Medicare, your upline, your FMO is very, very important. And I do really believe that there are very, very few organizations that are going to be a good opportunity for all of those. So
Absolutely.
That's all we got.
Hit us up. If you are not selling ACA, you'll be, I'm sure, spending some time with Miss Cori.
Yeah, a little bit more of a sales pitch than we normally get, but yeah.
Well, it's my true and honest.
You got to shoot your shot.
Yeah, love it. Thanks, Cori.
It's my true and honest opinion. So thanks for having me.
Thanks, guys. See you next week.
Agent